Word up. Look out for the cops. Cash food. Word up. 2 for 5s over here, baby. Word up. 2 for 5s. Niggas got guns. What's going on, everybody? It's Jordan from the Urban Traders Group, back with the weekly game plan. And as y'all know by now, with the third installment, the game plan is where I take you all through my personal trade ideas and market thoughts. And this is content purely for educational and entertainment purposes. This is not intended as financial advice. I am not a licensed financial advisor, so please see a properly licensed financial advisor in order for any real financial advice. But I just like to take you guys through my thoughts and what I think is going to happen. So, as we look at the market last week, we see that the Dow closed down 6 basis points, overall 37% year over year. The S&P closed up 17 basis points, overall 40% year over year. The NASDAQ closed up 24 basis points, overall 45% year over year. And as we see, that leads to continued strength in both the S&P and the NASDAQ, which both closed green for another week in a row. And the S&P posed a new all-time high this week in the 424s. This is in line with my trade plan. And if you guys check out the game plan number 2, you'll see what I'm talking about there. But this price action confirms all of our previous market thoughts from the first 2 videos. That lower long shadow candle that we saw in May was a continuation candle for an uptrend from the prior 3 months, and we're in an uptrend right now. Look to continue to go green. We're sticking with that 427 price target for the month. So as you all may or may not know, the business sector is facing several impactful factors, such as the G7 ministers wanting to institute a global corporate tax, the current administration wanting to fund the infrastructure bill with higher corporate and personal tax on individuals with an annual income greater than 400K, as well as the new potential House bill, which is aimed at breaking up big tech like Amazon, Google, and Facebook. The overall U.S. economy keeps facing inflation pressures with continued Fed support, keeping the economy propped up and growing as we try to unwind the last few quarters here in the second half of the COVID pandemic. With the Fed balance sheet finally topping over $8 trillion for the first time, I think this is signaling that the Fed can only hold out for so long. With global supply chain and travel beginning to return, the U.S. is currently going through labor supply challenges, with continued government stimulus being more beneficial to the people than working 40 hours from employers, forcing employers to have meaningful wage employment conversations, which, even though are taking quite some time to bear fruit, we are seeing that through 2026, wages will start to increase. As we head into the summer, I believe that we will continue to focus on reopening stock stories, and we may see that quite a few names that boomed during the pandemic continue to keep their market cap. Stories like Zoom and CRM make for a very interesting investment as the work from home sector and office demographic seems to shift. As stated in the last video, I am also paying close attention to the travel and entertainment, tech and retail sector, as well as the marijuana industry. I believe that these sectors will start to have a lot of appreciation over the summertime, and an investment now will bring a very good return in the future. And to round out the market news, let's recap some of the notable C-suite changes we observed over the week. A meme stock that we have all been watching, GameStop, added 2 former Amazon executives to their C-suite, which is very interesting because it looks like GameStop is trying to change their business model and is gearing towards the actual retail investor. So I think that as time goes forward, we will see that GameStop may actually come out of the pandemic better than when it went in, thanks to the interest that it has garnered. As well as Apple added a BMW executive to join the Project Titan, which is the rumored electric car program. And a lot of us think that this person will help Apple really break into the electric and autonomous vehicle industry. So now I want to take you guys through a couple charts. And as always, I like to start with SPY because SPY is how I look at the market. And as we look at SPY last week, we opened up. If I open up the chart here, SPY opened up in the 422s. We closed in the 424 area. got as low as 420s with the highs in the upper 424s. SPY is continuing to go green week over week. I think the SPY will continue this movement along the month of June and into July. So I really believe that SPY is an investment that I can continue to target into the upper 420s. The next stock that I want to walk you guys through is a stock that I'm looking at called Nike. And I don't know if you all look at Nike, but Nike is a stock that if we open it up here on the weekly chart, we see that it has a lot of support and resistance here in the last 8 to 9 months, since about November. But when we come to a closer view and we start to look at this year from January on up, we see that Nike's really consolidated between 141 and 129. So as we look at that area and we pull down into, let's say, a 3-day view, we see that Nike has bounced off of the support area here and looks to be passing through our Bollinger Band up into the 138 resistance. If we look at the day chart, we see that Nike is again bouncing off the bottom of the Bollinger Band and is looking to make a move to the upside into the 138s. The next stock that I want to take you guys through is Twitter. Twitter is a stock that when we look at the weekly chart, we see that it is also on the uptrend. And Twitter opened the week at 58.62. Twitter closed the week at 60.50, getting as high as 61.05 and as low as 57.73. And as we see Twitter, it is on a green trend here ever since the 17th of May. Ever since it bottomed out in that 48.49 area, it has been on an uptrend. And we look at Twitter having an ultimate resistance in the 75, maybe the 68 area here, where these base candles start to form, all the way up into the 75s here. So Twitter has quite a lot of resistance. I do believe that it will be making a move to the upside. And as I come down to my day chart, I see that we probably have some room up into the 62, 63s early on in the week. As I pull out to my 3-day towards the end of the week and into 2 weeks from now, I think we move up into the 67s. And the last stock that I want to bring you guys to is Boeing. And Boeing is a stock that I've been looking at every week since we started the weekly game plan. And originally I had Boeing on a bullish thesis up into the 280s through the middle of July. But as I go back and I look at Boeing, with the open that we had last week at 251, closing at 247, getting as low as 245, ultimately falling down to almost my 245 support right here, I think that I had to reestablish and relook at my bullish thesis. And I have now redesigned that thesis to believe that we will get about the 260, maybe early 270s at the end of June versus the 278, 280s area on Boeing. And that's ultimately due to some of the negative news that Boeing did have. However, the travel and entertainment sector does look like it wants to continue to move to the upside. And as airline travel starts to come back, specifically international travel, I believe that the demand for Boeing planes will increase, allowing them to appreciate in stock value, and the share price will increase, allowing us to make some really good investments over the summertime. So I want to thank you guys for tuning into the weekly game plan. Hope to see you guys next week, and hopefully this gave you some knowledge to think about this week as you think about your trades, your trade plans, and how you look at the market. Peace and prosperity.